This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your source for the latest Iowa ag news headlines right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffmann, Riley Smith, Mark Magnuson, and Andy Peterson. Now, from the IARN studios in Des Moines, here's Dustin.
Hello, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Hoffmann. Today is Monday, the 24th of March, 2025. So glad you could join us. Coming up a little later on in the program, we'll talk with Robin Schmahl of agmarket.net and get a look at the closing market numbers. But first, we're going to talk with Gail Stratman of FMC. We're going to talk a little bit about the fact where we can cut corners in 2025 to make sure we come in under budget on our inputs, but also where we cannot afford to cut corners. We're going to talk about that right now here with Gail Stratman. Talking with Gail Stratman of FMC. Gail, thanks for talking with us as always.
It's always a pleasure to be here.
All right, so we're talking, I know we talked last fall about a lot of things with making sure that we're making wise choices on where our budget constraints are. Where do we think about making changes, What kind of things are we looking at now as we're inching closer to that planting season? What are we thinking about more and more here?
Well, it's time to, kind of secure up our input picture and what that's going to look like. Weed control, we know we got to have weed control. The implications of not getting good weed control on the bottom line can be really detrimental. We can try to save 10 or 20 bucks an acre, but making a wrong decision or backing off of that weed control can not only have yield penalties in 2025 that can more than make up for the cost savings. I mean, you try to save $20 an acre and take a 10 bushel yield hit on that, you're now going way farther back in revenue than you ever did in cost savings. So think about what you're trying to do there from a cost saving standpoint, and make sure that that weed control program is going to be sound and it's going to give you the most maximum return on investment. And then the other piece of that is, as you think about it, you want to make sure that weed control program is sound, because if we now start having issues with weeds coming in, that seed bank is really going to get built up. And now you're not only going to be having a problem in 2025, but now you start leading to problems in 26 and 27 that's going to cost you even more money at that time. So backing off that weed control program in 2025, trying to just save money may not always be the best approach. Using products like our Authority Supreme Pre and then our layered residual program with Anthem Max have consistently been the longest residual, strongest active ingredients for weeds like water hemp, velvet leaf, grasses, lamb's quarter, all those key weeds that we fight on an annual basis. Those weeds are really critical to that weed competition piece that we're trying to avoid in corn and soybeans. So, you talk to your local retailer, get a sound residual and layered residual program in place for your weed control program, and remember, it really comes down to return on investment and maximizing that yield at the end of the season to maximize your revenue on that acre.
How much more does it bring precision ag and a lot of the soil samplings and things into a play now that we have such a thin margin of error?
Well, those things kind of help, because it really helps us understand the variability that can go on a field, and we can adjust those decisions on the fly in the field more than we ever could in the past. And so there's opportunities there to really maximize the efficiency that we're getting both out of products and those trips across the field. And so as we continue to employ more and more of these precision tools, weed control and crop protection is going to be a key piece of that, and we're continuing to research that and incorporate that as part of our recommendations as well.
So, and what kind of things can farmers think about? Obviously, you don't want to cut there, but obviously, what kind of things can you be more precise about and more varied with that gives you some room to play with in some of this crop protection?
Well, like I said, in the past, a lot of times maybe on our nutrient management, we were trying to make sure that we didn't under-fertilize something, and so we might have a little bit extra that we might add to that thing. That's going to be a little bit more of a situation this year where we're going to want to know exactly what we need on that acre and try to maximize what that soil is giving us, whether that's from better soil health, from cover crops, from rotational situations, and trying to really utilize those nutrients that are in that soil and bring that along as part of the program. The other piece of that, when we think about the crop protection side of it, again, weed control, cover crops, row spacing, all those sorts of things go along and help that herbicide program work so much better. So we're not looking to just invest more dollars into our weed control program. we're looking to utilize those other pieces of it that work together so that we can probably save on our inputs on the herbicide program by utilizing some of these other cultural practices. So again, it's getting back to and thinking about more of the true basics of weed management, pest management that we've always known about, but in the past maybe we didn't focus on them as much because it wasn't going to be that big of a cost consideration. This year, costs are really going to factor into that as we look at higher interest rates and having to cover that cost. We really need to, one, maximize the return on investment that we're getting out of those inputs, and two, still look at the amount of revenue that we can maximize on that acre throughout the season.
So also with inputs, a lot of times we talk about being proactive rather than reactive, but some farmers might be looking to saying, well, why spray it until I know I need it? But the thing is, once you see the signs of it being a problem, it's already too late, right?
Yeah, I mean, in a lot of cases, whether we're talking about insect damage or diseases, when you see the damage, a lot of times, it's a lot of cases, it's not too late to do something, but it's too late to get that lost yield or lost revenue back. We're gonna protect it from there, but we've got to be very diligent to be up front with those decisions. And so scouting is going to be ever more crucial if you're going to take that approach in 2025. But like I said, a lot of cases when we're dealing with diseases, a lot of our things are preventative. We're trying to prevent a problem or catch it very early on so that we prevent a disaster from happening. But management decisions and scouting and being on top of those decisions is going to be extremely timely if we're going to take that kind of approach.
All right, so where can folks find more information about the things we talked about here today?
So like I say, if you want more information on many of the FMC products, you can go to our website at ag.fmc.com, or you can talk to your local FMC Star retailer, and we can put you in touch with one of our technical agronomists or one of our sales reps. We can get you more information.
All right, Gail, thanks as always for your time.
Thank you. Appreciate it.
That again was Gail Stratman of FMC. We're going to take a quick break and hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, we will talk with Robin Schmahl of agmarket.net. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. We're back on Ag Matters PM here on the Iowa Agribusiness Radio Network and being joined by Robin Schmahl of agmarket.net. All right, Robin, we're a week away from all the big crop reports. What did we see in those markets today?
No, really not a whole lot. You could kind of say the market was pretty much benign. Didn't really want to do a whole lot. Most of the activity, I shouldn't say activity, movement was in the wheat market, and that's because some potential for significant rains in Texas, Oklahoma will be beneficial to the wheat crop. So other than that, there really wasn't a whole lot to really move the market. I don't think the trade is really squaring up positions prior to the report. Now, one thing we did note, again, there was a pretty significant liquidation in corn on the Commitment of Traders report. So really, corn, they've done a lot of liquidation over the last 6 weeks. So putting themselves a little bit more, maybe you could say, in a neutral position going into that. So that might be, just putting the market where it probably should be at this point in time. Now, we had export inspections today. Corn was good, right within the range at 1.463 million metric ton. Soybeans top end of the range at 822,000 tons. And wheat was above the range at 485,000 tons. So, again, not a lot of there as far as a real market type of a movement situation. Now, it was interesting to note that China soybean exports in the first 2 months of the year jumped 84.1%. Over last year. So I think a lot of that was due to the potential for upcoming tariffs and the trade war situation. So just making some comparisons there, not that they're that really short, but they just wanted to front load ahead. Now, the acreage report's going to be coming out later this week. Generally, they're looking at 3 to 4 million acres increase in corn and maybe 3 million less in soybeans. Ag Market put out their estimates today. Corn, we're looking at 95.39 million acres, which would be about almost 5 million more than last year. USDA had 90.59, and their Outlook Forum that they had earlier was 94 million acres. Soybeans at 82.75 is our estimate, compared to the Outlook Forum at 84 million, and last year at 87.5. Wheat at 47.82 is our estimate, compared to the Forum at 47 million acres and 46.08 last year. So we're looking at more acres of corn being planted due to the reports that we're hearing from soy seed companies. Now, the Buenos Aires Grain Exchange lowered their Argentina bean production estimate by 1 million tons to 48.6 million tons. We've been seeing a continual decrease as far as that's been concerned from the Brazil-Argentina area. So that's not really been a market mover. It's just something that's making some adjustments, but there's still sufficient supplies around. So we didn't really see a whole lot to get traders excited about in the market today.
All right, well, and moving on to the livestock side of things, Robin, we know we had the cattle on feed report after the close on Friday. Did that have any reactions in today, and how did hogs fare as well?
Well, the cattle on feed report was considered bullish because of the huge decrease in feeders, down to 92%, which was, or 82%, which was below what the trade had estimated. Now, the other placements were, that was placements, they were bullish. Cattle on feed was a little bullish, marketing's a little bearish, but overall a bullish report. Now, it seems that the market had that factored in. That was the one question we had with a recent increase, as much as it was. Did it have that factored in? Well, we opened stronger this morning, and then we ran out of steam. By the end of the day, we had the April contract down $1. So is that factored in? It would appear that way at this point in time. The market has been overbought. Maybe there's going to be a little bit further liquidation. A little surprising as well because of the strong cash last week. Southern live cattle traded $7 higher, and northern dressed cattle $10 higher. So we got a discount in that April contract right now. So there were only about 18% of the cattle purchased last week for forward or deferred delivery. So that could mean that the packers might be short bought this week. But it might be a tall order to really see another big jump in cash cattle. So the market's going to be back and forth, I think, as we move through the week. Now, box beef at midday was 13 cents lower on choice and $2.16 higher on select. That did not perform like many in the industry had anticipated with the bullish cattle on feed report, but the market might be settling maybe or moving to where it maybe should be at this point in time. Now, hogs took a beating today after the rebound last week, Friday. Futures went down to the low end of the trading range. Demand remains variable, and that's been the nemesis for that market. We haven't seen solid demand pickup. Now, cutouts at midday were up $1.53, but the cash hogs today were down 23 cents, which cash hogs generally trade lower on Monday as packers wait to see what the retail demand is over the weekend. Now, we have a hog and pig report coming out on Thursday, so I think we're going to start seeing a little bit more positioning ahead of that report.
All right. Well, Robin, we thank you so much for the analysis here today. And if folks want to pick your guys' brains there at agmarket.net, maybe think about some of the things they should be looking at in their marketing plan, what's the best way for them to get in touch?
They can call me directly at 877-256-3253, or they can go to our website, agmarket.net. There's an 844 number there that they can feel free to reach out, and somebody will be glad to answer their questions.
All right. Well, Robin, thank you so much for the insight, and we'll talk to you again real soon.
All right. Thank you. It's always a pleasure.
That again was Robin Schmahl of agmarket.net. Let's take a look at the closing numbers on the Iowa Agribusiness Radio Network market screen. At the close, May corn was up a quarter at $4.64 1/2. Soybeans down 2 1/2 at $10.07 1/4. Soybean meal down $2.70 at $2.9760. Soy oil up 14 cents at $42.15. Chicago wheat down a dime at $5.48 and a quarter. Kansas wheat down 10 3/4 at $5.78 even. Minneapolis spring wheat down 12 3/4 at $5.92 and a quarter. And oats down 7 1/4 at $3.73 and a half. On the Merc, live cattle down $1.05 at $205.90. Feeders up 27 cents at $285.25. Lean hogs down 42 cents at $85.70. Pork cutouts unchanged at $97.10. And Class 3 milk up 20 cents at $17.08. And that's been a check of our market recap, and that brings us to the end of today's show. You can find all our content online at iowaagnet.com, as well as follow us on Facebook, X, and on our YouTube channel. Make sure you subscribe and hit the bell icon so you can be notified each time we put out a new video project. Also, don't forget about market analysis free of charge 3 times a day to your mobile device through the Iowa Agribusiness Radio Network Market Podcast. You can also find replays of the Pods of Potential, Between the Pods, and also our Iowa Ag Matters programs and Weekend Ag Matters as well, all at iowaagnet.com. From the iARN studios in Des Moines, I'm Dustin Hoffmann. For Riley Smith, Mark Magnuson, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.